Wonderful. Good morning here from Vancouver. This is SF Live, episode 102 already. I'm joined in a few short seconds by Hugh Agro. He's president and CEO of Revival Gold. We're going to talk about the PEA, the recent drilling at Beartrack and Beartrack. Why do I say Bear Creek? Beartrack. Apologies. And we're going to ask all the questions. We're going to get all the details from the PEA. But before we get started, make sure to follow us on YouTube, follow us on Twitter, hit the alert and subscribe button. That way you get notified when we go live with another update. Also, this is a format for you. This is an interactive format. Use hashtag AskRVG. That's the company's ticker on the Toronto Stock Exchange during this live interview. And we'll get to your questions at the end of our conversation with you. We'll go on Twitter and we'll find them. We'll see them. So make sure to post them there as well. Now, it is my pleasure to introduce Hugh. And Hugh, thanks for joining us. It's timely that you're on and great for having you. How are things?
Well, great to be here with you, Kai, on SF Online.
Appreciate that. Thanks. And let's dive right in. Give us a quick 30, 60-second rundown on Revival so we're all on the same level before we dive into PEA details and drilling details.
Revival's a growth company in gold. We've been building and advancing forward the company with the Beartrack Arnett gold project in Idaho, in the United States. We've just put out a PEA on the first phase heap leach on this project. It's a brownfield site, 3 million ounces, and a solid team behind it. Really happy to be talking about the story today.
Fantastic. That's a great quick intro. You touched on a lot of points already: jurisdiction, ounces in the ground, all of that. But before we get to the PEA and the drilling, I always like starting with the financial side of things because that's really important for me as well. You did a very opportune financing in August. You raised $15 million. And I actually asked you before because I have to admit, I made the mistake. I didn't double check whether it was a prospectus financing or not. And I asked you whether shares will be coming free trading in about 3 weeks. And what was your answer to that one?
Yeah, we are all fully free trading. So it was a prospectus offering. It was led by BMO Capital Markets. It was a bought deal financing. And it was interesting because at the time, we had traded as high as $1.60 a share. So it was tough for us to part with shares at $1.10. Hindsight's always 20/20. The market's backed off here. But I think the investors who came in on that financing are solid. And they love the story. They love what we're doing. We really built up a strong book. We've got 40% institutional shareholders. And despite some wobbling here in the gold market in the last week or so, I think it turned out to have been well timed, and they'll do very well through the longer term.
So let's just dig a little deeper on the institutional shareholders who participated in the recent financing, and who are those?
Yes, our key shareholders: Orion Mine Finance, a large private equity fund out of New York, one of the biggest players in the space. US Global, Gold 2000. We've also got a couple of family office groups. In total, about 40% of our share structure.
Yeah, you mentioned the share price decline in recent days. Yes, gold is a bit in a volatile situation right now, but it seems like, I haven't checked in the last half an hour, but it seems like we're holding the technical level of 1850. But you said you've seen some tax loss selling in the share as well. Can you elaborate on that for just a second?
Yeah, I mean, as is the case around this time of year, one of our friends in the newsletter Router Crowd put out a tax loss sell recommendation, and we saw some underperformance in our shares over the last few days. Personally, I think that's just a great buying opportunity for long-term shareholders. Management's just come off blackout from getting our PEA out earlier this week, and I was in the market earlier today buying shares. I think this is a steal. It's Thanksgiving Black Friday, U.S. Thanksgiving Black Friday already.
Fantastic! Just a week away from Black Friday, actually, as well. I'm being bombarded by Amazon pop-up messages on my phone already, so it's brutal. But you said
your sale on RVG on the TSX.v, RVGLF on the OTCQB today.
Pretty much shipping free as well, right? So free shipping. So, but let's talk about why it's a good buying opportunity. You put out the PEA just last week, or a couple days ago, actually. What was it? Today is I got all my days. For me, it's all a blur nowadays. If you tell me today's Wednesday, I believe you. So it's
Tuesday morning, Kai. And today is Thursday, just to orientate you.
And I'm checking, it's the 19th, so you put out the PEA on the 17th, so 2 days ago. It's fairly fresh still. Run us through the details of the PEA, and then we'll dive a little deeper.
Yeah, the headline is 72,000 ounces a year at an all-in sustaining cash cost of about just over $1,000 an ounce. And this is, remember, the first phase of the project. We've got a large mill project beyond. but we've got existing infrastructure, including an existing ADR facility, power to site, roads. We wanted to get this first phase project scoped out, take it forward to a PFS as we go on here, and build the ounces in the project for the mill scenario to follow. But it's the headline number, 72,000 ounces a year, just over $1,000 an ounce, all-in sustaining cash costs. And just to put that all into perspective, I mean, if you look at U.S. heap leach producers today, not anything that's conceptualized, but things that are actually happening today, we would stand at the very low end of the cash, the all-in sustaining cost for projects of this nature in the United States. Good geography, good availability of people, and security of title.
Fantastic. And you mentioned you have ADR planned on site, you have infrastructure on site, yet you have 100 million capex. Like, what's driving the cost? What are the main drivers there?
Well, the main driver is, I think we've gone with a blue chip engineering firm, right? We are way past where most folks are with a PEA in terms of our experience with the asset. In fact, we've got our general manager who was the former general manager for the operating mine. We've got all of the expertise that this gentleman, Pete Blakely, brings with him. The engineering firm behind the PEA, Wood PLC, RPA on the resource, PwC on the tax, KC Harvey on the environmental. These are blue chip firms. So, anybody who's contemplating building a heap leach facility, let alone a mill facility today, has to take into consideration current costs. And I think what we've got is a blue chip estimate here.
Fantastic.
Includes $20 million of contingency. But I think it's a very fair and balanced approach to our project.
You said $20 million of contingency. That's actually 25%. That's usually 10% higher than everybody else's. I'm used to seeing like 12 to 15% contingency. Why that much?
Look, I think the big difference between the Revival Gold team and many of the exploration companies out there is we are driven by actually having been operators and built mines before, and I'm a mining engineer by background, and we think in terms of delivering, and we under-promise, we always over-deliver.
Fantastic. That's exactly what investors want to hear, obviously. So good track record as well. You come from a major as well. You've worked at a major past, and we've bumped into each other a bunch of times in the past. So who were you with before?
So I cut my teeth with Placer Dome early on, and then I went on to Kinross, and I was part of taking Kinross from a 1.7 billion market cap company to 17 billion in the last cycle. I retired in late 2009, but I came back to the business to build up Revival Gold in late 2016, 2017, and the result is from 0 to 3 million ounces, from nil to a PEA contemplated, just released today. We've got a solid team and a great exploration opportunity to develop. We've got 10 kilometers of favorable structure on the Beartrack Arnett Gold Project. 3 drill rigs turning right now.
Fantastic. We're going to get to that. We're going to get to the drilling part. And I got sidetracked with asking you about your personal background, but I want to stick on the PEA for a second. What are some of the levers you can pull? And the other question, like maybe part B of that question, is your fleet as well. Is that owner-operated or are you leasing?
I'll answer the first question. It's a leased fleet. That was optimal for the mine life contemplated in the plan at 7 years. But of course, this PEA is based on the resource we put out in February. We've been drilling. We've released 12 holes. We've drilled 30 holes up in the Haiti area, and we've hit mineralization in each of the holes we've released. So that's undoubtedly going to expand. It's all oxide material. It's all within 140 meters of surface. And so, look, we're going to be adding mine life to this plan. So that's number one. I think number two is, as we build up the resource here, we'll look to increase the pace of production. Currently contemplating 12,000 tons a day of production. The historic operating rate was around 14,000 tons a day, produced about 100,000 ounces a year of gold. We like the model of phasing things because we think that's the best risk reward for investors. Modest capital, we get started, we get the team chewing into things, and then we build from there. Now, the big opportunity is in the mill project. And at the contemplated rate that RPA came out with our resource earlier this year, 20,000 tons a day in a mill scenario, and our 94% recovery in the mill scenario, and our mill grade, we're talking about 300,000 ounces a year of gold. So that would put us in the top 5 or 6 of current U.S. gold producers. It's a big prize.
Yeah, $300,000. Not too many companies can put that on their door. So that does make a difference, right? And you mentioned drilling at Haiti, obviously, and I went through the results earlier this morning as well and looked at your PEA, and it seems metallurgy like stood out to me as well. Like I'm a novice, so don't take too much out of that, but I noticed the 60% recovery rate, obviously, on the metallurgy, which is for a gold heap leach project fairly low. But you mixed a bunch of oxide, transitional, and sulfide material. So how does the Haiti drilling and the PEA and the metallurgy sort of mix together?
Well, this is all part of how we unlock value in this opportunity. You know, stepping back, we actually put the Arnett or the Haiti land position together first. Then we went to Yamana Gold and we brought in the former producing Beartrack site with all its infrastructure. And we did it in a very constructive kind of arrangement, so win-win scenario for Yamana and for ourselves. But the net result is we've got this oxide opportunity, satellite deposit to the existing oxide and transition and sulfide material at Beartrack. And it's a great complementary fit. As you say, the oxide has higher recovery. But what we do when we develop out these plans is optimize not recovery, not gold grade, but value, NAV. Mining engineers, we're focused on value. We're not focused on finding ounces. We're focused on finding value. And so that's what we've done with this PEA. And the optimal thing for us to do with this PEA is to process the oxides, but also to leach the some of the transition and sulfide material. It's about 30 million tons in total. And the average recovery, as you point out, is about 60% from an average feed grade of 0.87 grams per ton gold. And that gives us an $88 million NPV at $1,550 gold, going to over $200 million of NPV at $1,950 gold. So the optimal plan here is to leach what we've leached. And we see opportunity to, of course, grow the oxide material, and we'll continue to do that.
Okay, fantastic. You just mentioned the 1550 price valuation or gold price of gold that you used in the PEA. What did you base your price assumptions on?
So it's based on a lot of factors. First and foremost, it's what our engineers directed us to use, and they go through a complex process of looking at the historic gold price, the forecasts on the gold price, the sensitivity of the project. And so that's the first point of guidance and the first point of direction. But the other thing is, of course, we check back with our bankers at BMO Capital Markets, who keep very close eye on consensus gold price targets. Long-term targets, $1,550 an ounce. Of course, we're a lot higher today, but in the long term, you tend to revert to a mean, and so that's the science behind it.
Yeah, I think Goldman just called to $2,300 gold. So in one of their forecasts, I was like, "Woohoo! Let's do this! Fantastic!" In terms of infrastructure, you said you had quite a bit of infrastructure in place. Like, how much money is that saving you moving forward, and also how much does it cut down on permitting time? And being in Idaho, permitting for me is an important one.
I love this question about infrastructure. I mean, I think the project value, the market cap of the company, is reflected in the infrastructure savings alone. If you think about it, we're talking about a power line, the permitting and the placement of the power line. We're talking about roads, road access. We're talking about a plant site. So replacement value for these components, I'm sure it would approach our current market cap in the company. So in a sense, you get the 3 million ounces and all of the production for free out of our market cap. But in terms of your other question in respect of permitting, yes, permitting in the United States is not easy. You've got to go through a process. The good thing is, unlike in a lot of other parts of the world, we've got rule of law. We do have a set process. In our case, we're on a brownfield site, and that differentiates us from many others. And I'm not just talking about a brownfield site with a fully remediated or reclaimed scenario. I'm talking about a brownfield site with an existing moving plant that's actually processing leachate off the old leach pads as we speak today. So In terms of permitting, our whole tactic has been to keep the footprint of our operations at Beartrack within the old plan of operations. We think that will give us a real advantage in terms of re-establishing the permitting to produce gold from the project. And that's a big savings for us. The other thing, just to note, again, compared to some of our peers, we are in a part of the world that is favorably disposed to responsible exploration and mining. And I got to tell you, Beartrack Arnett has got an exemplary, award-winning ESG track record, and we intend to uphold the highest standards of performance on the site.
Awesome. And how do you show that, the ESGs? Like, I actually talked to another company out of Idaho the other day, and they had some environmental issues, and ESGs, like, it's above the project, it's above management, is the number one thing they're addressing. Like, how do you address that in specific? Or specifically?
Well, listen, those of us who've been in the mining industry for all of our careers, as I have 30 years in the business, know that the ability to mine depends on the license to operate. License to operate means a neighborly a relationship with the folks that are most impacted by the project in the local community. And so we go out of our way to have regular community meetings. We go out of our way to meet with the state and local representatives. We go out of our way to have people on the site, including the NGOs that sometimes take exception to these projects just by virtue of the fact that that's how they make their memberships. We go out of our way to be sure that we are taking on input with respect to the project. We don't just pay taxes as a mining business. We also employ people. We buy goods and services. We add to the social and economic prosperity of a community. And that's something that's grounded in anybody who works in the mining industry. We don't need a three-letter acronym, ESG, to believe and live and do those kinds of things.
Very good. No, that's a very good comment. And we could drill down on this even further, what ESG actually means, and if it's just a marketing gimmick. Or if there's...
Well, it used to be called CSR. It used to be called EH&S. It used to be called social and government relations. I mean, there's all kinds of different names for it. What it is it's licensed to operate. And it's being a good neighbor. And it's doing right by the people you work with and you work around, both the people who work for you and the people who work with you. And around you. I mean, this is the license to operate.
Exactly. It's like for me as well, like, you're a publicly listed company. If you were to do anything wrong, the market will just sell you off. And being listed in Canada, I think there's even higher principles attached to that than maybe elsewhere.
Well, sorry, I just want to
I
want to comment. I mean, plus we're good people. I mean, we live in these communities. We like to go fishing. We like to go hunting. We like to walk out and enjoy the outdoors. That's why I got into mining engineering, because I love being in the outdoors and in some of the far-flung parts of the world. And so we will take care of the environment in everything we do, and we will take care of our people first and foremost.
Fantastic. No, thanks for adding that as well. So that's great. And we're sort of slowly coming up to our time limit, but you mentioned something in another interview, and I think it was a Mining Journal article recently, and it said the first phase gives us an opportunity to produce gold in this cycle. Okay, and I told you beforehand, like, I sort of warned you that I'll ask you about it, because that statement makes me nervous, but also excited. Okay, and I think we need to unpack this just a little bit. And what do you actually mean by in this cycle? Like, how long do you think we still have? Rick Rule says bull market is about 10 years. So how far are we into this already? Is this one shorter, longer? But also, like, and the part that makes me nervous is when somebody says, okay, are you rushing it? Right, depending on how long you think you have. So let's unpack that one.
Yeah, lots of questions there. First of all, on the gold price. Look, I am one of those people who does not believe that governments will be able to manage their balance sheets and manage currencies in the short term, medium term, and long run. I'm a gold bull. I think gold is going higher. I'm also, though, a responsible business person, which means I don't want to count on that for the project that we're developing to make sense. And I also know that our investors are investing in Revival Gold to make money. How do we make money in mining? We make money in mining by finding, permitting, developing, and operating a successful mining project. And so that's what we intend to do with Revival Gold and with the Beartrack Arnett Gold Project. Now, in the shorter term, the medium term, investors will want to see us continue to grow the deposit at Beartrack Arnett. And as I told you, we've got several phases to this to reveal, I should say, over the next years to come. And the first phase is the restart of the leach operation. It's a relatively low technical and execution risk project with relatively straightforward permitting aspects to it, and we have the management team to do that. So I think what we've got is our cake and eat it too, Kai. In the short term, we can continue to progress this project towards producing cash flow. That's the back end of the classic Lassonde curve in the life cycle of a project. But we're riding the Lassonde curve in two ways. In the first instance, we'll continue to explore and develop the exploration potential on the project. We've got high grades in this system. We've got almost 10 meters of 2 ounces per ton in the system. In several locations, we've got 10, 8, 12, 5 grams per ton. We haven't even started looking at the exploration potential here in this project. The deposit's open at depth beyond 600 meters. It's open on strike in both directions. And we're drilling right now 3 kilometers south of the main area of mineralization. So lots of exploration to come, but we want our cake and eat it too. You know, we want to have exploration sizzle for our shareholders, and we also understand the importance of ultimately taking this project through to cash flow.
Fantastic. And you mentioned drilling again, exploration potential. You were 4,900 meters into Haiti. And trying to get the projects aligned, because Arnett came to mind first, but it's part of Arnett. So 4,900 meters drilled to date. Like what's in the labs right now? What can we expect sort of after the PEAs come out now in terms of news flow?
Yeah, the total drill program planned for this year at Beartrack Arnett was 10,000 meters. We're running up against the back end of the season right now with the snow and so on. But we're pushing to try and complete all 10,000 meters. We'll see how far we get here. In the meantime, I can tell you that we've already done 4,900 meters in the Haiti satellite deposit area. We've put out 12 holes from that program so far. We've got another 18 to go. And then in the Beartrack area, we're drilling in 3 locations, which are exploration opportunities along the main mineralized structure, and then, as I said earlier, 3 kilometers south of that structure at Beartrack. So we've got another, call it 9 holes to come out of there. So we're looking at over 24 holes left to come. Labs are slow right now, but we'll get those results to you as soon as we can. And I would expect the next results to come in probably early December, and then we'll have results to follow in January and possibly out till February. We'll be back in the field again next season. And as you know, we're fully funded for our exploration program next year, so no immediate need to run to the market to raise capital. Lots of results to come in the meantime.
Fantastic. That's a perfect note to end on. I have nothing further to add. I think we touched on everything regarding PEA and drilling. Be great to have you back on in a few months to see how drilling went. And thanks for taking the time today. Really appreciate it. Thanks for joining us, Hugh.
Thank you, Kyle.
Everybody else, thanks for joining us. Thanks for watching SF Live episode 102 with Hugh Agro of Revival Gold. Make sure to follow us on Twitter, follow us on YouTube, Spotify, or any actually podcasting platform that you get your content from. Leave a comment, leave a like, and of course, subscribe. We appreciate that. Thank you so much, and stay tuned. We'll be back soon.